I've spent most of my adult life figuring out how to accurately and reliably predict local real estate cycles because my success depended on it, and so does yours. I'll show you right here, right now, what to look out for and how to avoid the financial havoc it'll wreak. We identify current and future hot and emerging markets across the country using our time-tested and proven market algorithms. Here are some of the best markets as I record this video. Seattle, Washington, and Tacoma, Washington. Actually, most of Washington State and Oregon are pretty hot. See all these markets in red? For informed investors, these hot markets will create more wealth in a few years than other investors, those who ignore the market cycles, will ever create in a lifetime. Here's some more hot markets. Coeur d'Alene, Idaho. Salem, Oregon. Fort Worth, Texas. Nashville, Tennessee. Daytona Beach, Florida. Dallas, Texas. Salt Lake City, Utah. Eugene, Oregon. Lakeland, Florida. Palm Bay, Florida. Grand Rapids, Michigan. Provo, Utah. Colorado Springs, Colorado. Muskegon, Michigan. And Lincoln, Nebraska. They're spread all over, from Florida to Oregon and from Texas to Michigan. And yes, you heard that right. Even some of the old Rust Belt markets have been coming back to life. You should only invest in hot markets like these. It's the only way you can use real estate to build quick wealth and minimize your effort and downside risk. There are plenty of other high-profit, lower-risk markets right now, as you can see here. This is our new Hot Market Finder tool. There are millions of calculations that go behind what you see here. It's so powerful we just moved it onto a special new platform. I can now show you, visually, in a few clicks, what would have taken all day to explain. What you're looking at is a ranked list of all U.S. markets. This one is ranked from best to worst using our Master Score indicator. Don't worry about these other columns right now. There's some of the other indicators we use to track and predict market cycles. For now, just get a sense of where all these hot markets are. See how they're spread all over the country? If you know how to find them, there's pretty much always a hot or emerging market where you can create a lifetime of wealth in a short period. We can also reorder this list by clicking up here. We're now looking at the worst markets in the U.S., and that's what I want you to focus on. We're at the very early stage of a unique type of market reversal, called a stealth or selective down cycle. It doesn't matter what name you give it, it'll feel just like the last crash if you get blindsided by it. See how these crummy markets are also spread all across the country, in different states? That's the troubling part. Here they are on that same Master Score map. This time we're looking at the weakest markets in the country, those with the lowest scores. Casper, Wyoming, Watertown, New York, Bismarck, North Dakota, Charleston, West Virginia, Enid, Oklahoma, Gadsden, Alabama, Williamsport, Pennsylvania, Odessa, Texas, Johnstown, Pennsylvania, Peoria, Illinois, Atlantic City, New Jersey, Victoria, Texas, Wheeling, West Virginia, Cape Girardeau, Missouri, Valdosta, Georgia, Farmington, New Mexico. It's unusual when the crummiest markets in the country are popping up like whack-a-moles in different states, creating pockets of extreme weakness alongside otherwise healthy local markets. You can't find safety simply by being in a strong state or region anymore. In the last crash, by the time most of you in the media became aware of what was going on, it was already too late to save yourself. This crash will be even harder to spot because it's so local. Instead of a huge tidal wave, this one seems to be more like guerrilla ambush, picking off investors and markets one by one. Let's use my market as an example. I live in Ocala, Florida. This shows the master scores for the previous quarter. And here's Ocala. See all the red-colored markets nearby? Those are all great wealth-building markets. Except this blue one, the Villages. It's one of the weakest markets in the country. And it's right next to me and all these other hot markets. That's not normal. And I'm starting to see similar anomalies all over the country, where you'd least expect it, and getting worse. I began warning locals how the Villages were starting to fall off a cliff 3 years ago. Look how different these two are. A quick scroll through their market report tells you all you need to know. For most of last year, Ocala was in the top 20% or so nationwide. The Master Score, the TAP Score, THAR, Total Home Appreciation Rate, all of these gauges were showing Ocala with top rankings until this most recent period. It's not until you get down here to the star indicators that you start seeing any weakness creeping into the Ocala market. These red, yellow, and green lights, they're like advanced warning indicators. As long as they stay green, you can go back to sleep, nothing to worry about. Compare that market report to this next one, for the Villages, 6 miles away. It shows a completely different story, doesn't it? These ranking gauges look horrible. The tap slider balls are all the way left, at the weakest level. The Villages is, and has been, one of the worst markets in the country, literally in the bottom 5 or 10% for most of our indicators over the last couple years. The star indicator here looks nasty, red everywhere. They actually started turning from green to red back in 2014 and deteriorated ever since. It's not just the Villages. Look at all these crummy markets. We're looking at the hot market finder in reverse order again. There are lots of other weak and declining markets we didn't go over. You need to avoid them all. Check them out here in this left column. Here's the Villages. Its master score is in the bottom 11%. That's what this 11 means in the first column. It's percentile. To the right, you can also see where it stands with these other market indicators. Moving further right, you see how it ranked last quarter and a year ago for these same indicators. As a market's rank gets weaker, its numbers drop. They're also color-coded. Dark red is the lowest, weakest color. Dark green is the strongest. Take a look at these other crummy markets. Hopefully you're not invested in them right now. As we move away from the very worst markets, you start seeing some other colors coming in, especially in the year-ago columns on the right. Here's an interesting one, Napa, California. I mean interesting in a bad way. See these different colors off to the right? How in the previous quarter, a couple of Napa's indicators were yellow that are now red, and a year ago, they were light green. In Napa's case, they're going from more green and yellow on the right to more red now. That means it's quickly getting worse, not better. It's just an easy visual way you can scan for emerging, or in this case, falling markets. Maybe the wildfires in Napa contribute to all the red. I've seen natural disasters like floods, fires, and hurricanes go both ways in terms of real estate prices. In some cases, it kills longer-term demand and prices fall. In other cases, the reduced supply pushes prices higher. Anyway, it's definitely not a market I'd be in right now. It's not a complex decision when you have the right tools. With a quick scan, you've got your answer, don't you? Getting caught in a down cycle, or even a flat cycle, just sucks the life right out of you.